My name is Rodney Constable. I'm the president of Simple Market Signals, and today we are going to be doing technical analysis on the S&P 500 for Wednesday, February 19th, 2020. First thing I want you to look at here is in the upper right-hand corner of the screen. You can see we were up just a little less than 0.5% for the day on the S&P 500, up 47/100ths of 1%. Now, this chart is a 5-day chart where each candlestick represents 5 minutes of trading in the S&P 500. So right here where you can see my cursor moving on the right-hand side of the screen, that is Wednesday, February 19th, and you can see here that we gapped up this morning and opened up above what has been our short-term overhead resistance point at about 3380, and we spent the entire day above that level. So pretty nice day here, and you can see that pulled back a little bit in the afternoon, kind of closed in the middle of the trading session, but a very nice day indeed, and another all-time closing high for the S&P 500. So just a super, super resilient market we have going on here. Now, over the last 5 trading sessions here, obviously we're up today, but if you go back over the last 4 prior sessions, you can see here that we were closing above this 3370 level, and that's why I have that line here. So 3370 was our prior support level, but now it's going to move up to this 3380 level for the short-term support. Prior resistance, and you can see here that we had resistance for a few days. This 3380 level kind of acted as overhead resistance. Prior resistance becomes support once penetrated. So the fact that we gapped up today, opened above 3380 and closed above 3380 is a very nice sign indeed, and it makes 3380 our new short-term support level. So to the degree that we continue to close above 3380, this market is the bull market is still intact. Everything's going extremely well. And then 3370, of course, would be the next short-term support level. And I'm going to back away here and now go to a 1-hour chart. So this is a 2-month 1-hour chart where each candlestick represents 1 hour of trading in the S&P 500. A little easier to see this 3370 level here, where, again, it acted as kind of overhead resistance for a few hours. Again, each one of these bars is an hour, and then we got up above the 3370 area, and you can see that most every hour of trading for the last week and a half or so has been above this 3370 level. So 3370 obviously is a super important short-term support level, and let's go ahead and draw a line around this 3380 level just to kind of indicate that it is now our new short-term support level. And you can see that here, that prior resistance becomes support once penetrated to the upside. So now this 3380 level becomes our new short-term support level. Now, when we back away from this 3370 area, if and when the market starts to roll over and falls beneath the 3380 and then the 3370 level, the next area of support will come in around this 3320 level on the S&P 500. And you can see here that in the middle of January, we got above this, and it acted as a support level for several days, and then the coronavirus news came out. The market fell down to this 3220 level, which we will spend a little time on. This is a super important support level, and then it bounced off that 3220, never closing below that, and then we got right back within a few days. We got right back above this 3320 level, and since really the third trading day in February, right, the 5th of February, we have been above this 3320 level. So it just shows how important this particular level is. Now let's back away a little bit more and let's look at a longer term chart. This is a 1-year chart where each candlestick now represents 1 day of trading in the S&P 500. And we've already looked at the 3320 level. Now let's look at this 3220. And we'll spend a little time on this. I even have one more chart for you on that, but just want to illustrate the point here that, and you'll probably hear me say this several times in today's video, this 3220 level, in my estimation, is the most important support level we have for right now, and I'll spend a little bit more time on that. But before I do, I want to point out that, of course, I've already laid out all the support levels here that we'll talk about. The green line is the 20-day moving average. The blue line here is the 50-day moving average, and this orangish gold line is our 200-day moving average. So a couple of things to point out here. We have been now above the 50-day moving average since the first part of really the second week, right, in October. So we got up right here, as you can see, where my cursor's moving. We got up above the 50-day moving average, this blue line, and we have been above that 50 since then. That means we are now in our 19th week above the 50-day moving average. Now, in preparing for this video earlier today, I went back and looked clear back to 2007, so I went back quite a few years, and this is the second longest run we have had. Starting with the beginning of 2007, this is the second longest run we have had above the 50-day moving average. The longest run was back in 2013, where we traded above the 50-day moving average for 24 and a half weeks. Again, this is the 19th week we have been above the 50. The next longest period I could find was an 18-week run in 2010, and then I found a 17-week run in 2017. So, you know, it just points to, sorry about the noise there, it was handling a piece of paper. It just points to the strength of this market, but also, you know, it might be, in the short term anyway, it might be getting a little long in the tooth. So we'll have to keep an eye on that. And so we know that our short-term support levels are going to come in at 33.80 and then 33.70 below that, and then there's some support, as we already know, about 33.20, which lines up perfectly, just coincidentally, with that 20-day moving average, which, by the way, since the middle of October, we have only been beneath the 20 for a couple of days. So we broke beneath the 20 there for basically just one day, and then when the coronavirus news came out, we traded beneath the 20 and above the 50 for just a few days, and then jumped right back above that 20-day moving average where we've been, since. So it just illustrates that this particular run since the beginning of October is probably a little long in the tooth. Doesn't mean it can't go on for a few more weeks. However, again, going back at least a dozen years or more, this is the second longest run above the 50-day moving average without trading and breaking beneath the 50-day moving average that we've had. So that's one thing to keep an eye on. The other thing is the distance that we're trading above the 200-day moving average. Now, I just ran the calculations on that. We're trading 11.49% above the 200-day moving average, and you can see that the last time we even touched the 200-day moving average was back at the end of May, beginning of June. So again, it's been a pretty long run since we touched the 200-day moving average, and if this market starts to correct and pulls back to the 200-day moving average anytime soon, that would be an 11.49% pullback to that area. So something to keep an eye on. And let's touch on a few more support levels here. If this 32.20 level breaks, which, by the way, the 50-day moving average right now is setting at 3.7% below where we closed today. So if we pull back to the 50, which is a pretty common pullback, right? That's 3.7%. Not a huge pullback, but it's 3.7%. If we pull back to this 32.20, which I will touch on a little bit more in another chart, that would be a 5.16% pullback from where we closed today. And again, if we pull clear back to the 200-day moving average, that would be an 11.49% pullback. And of course, we know that anything over 10% is considered a correction. So that would be a pretty significant pullback from here. Now, if this 32.20 level does not hold, so let's say that we start to correct, we fall beneath the 20-day moving average, the 50-day moving average, we fall beneath the 32.20. The next area of support is going to come in somewhere around this 3100 level, and then if that doesn't hold, then we have quite a bit of support starting at around, well, of course, the 200-day moving average will always be critical, right? The 200 is just slightly over this 30.20 area, as you can see here, and there's a lot of support going clear back to the middle of 2019, starting at this 30.20 level, and then, of course, the 3000 level. But any of you that have been watching my videos as of late, know that round numbers have and it's been like this for a long time, a century or more. It's been noted by legendary traders that round numbers have a psychological effect on human beings, both in individual stocks as well as the indices. So this 3,000 level and the 3,100 level could be quite critical going forward. So hopefully we won't see those numbers anytime soon. But if we pull back to those levels, at least you'll know that they should provide some psychological as well as technical support. Now, what we're looking at here is a one-day chart. So again, each candlestick represents 1 day, and it is a 2-month chart. So we're looking at, again, a daily chart going back 2 months. And the reason I'm zooming in here, if you will, is so we can really talk about this 3220 level, and you guys can see the importance of this. And back in December, on December 20th, you can see that we had a high volume spike, which is super important, and we closed above this 3220 level for the first time in history. And then you can see that we have not closed beneath that 3220 level since. So all of the trading, all the closing trades in 2020, and more technically correct, since December 20th, have been above this 3220 level. So to me, this is why this is such an important level at this point. For about 2 months now, 2 months as of today, it has been our support level. We have not broken beneath it. When the coronavirus came out, the news on the coronavirus came out, we corrected down to, and intraday, you can see the tail on this candle, intraday went beneath 3220, but every single close that we have had in the S&P 500 since December 20th has been above 3220. So this is why I say this is a super critical area. And again, right now that's setting at about 5.16% beneath where we closed for the day. I hope you've enjoyed this technical analysis of the S&P 500 for Wednesday, February 19th. If you haven't already done so, please subscribe to my YouTube channel. Please give me a thumbs up on this video, and I look forward to seeing you in the next video. If you would like to find out more about becoming a successful investor, I would highly suggest you watch my information-packed Successful Investor webinar. It is out on my YouTube channel. I will also leave a link to that webinar in the description box below this video. The webinar is about an hour long. It is information-packed. It's going to be one of the most important hours you have ever invested in yourself. That I promise you. So what are the next steps? Watch my Successful Investor webinar. Watch my other YouTube videos, subscribe to my YouTube channel for ongoing finance and success education. Please give me a thumbs up on this and other videos that you like. Leave a comment on my videos and share my videos and my YouTube channel with your friends, family, and colleagues. And please feel free to connect with me on social media. Thank you so much for being on this video. I really appreciate it, and I look forward to seeing you on the next video.